Good morning. Today is Thursday, July the 6th, and the time right now in Singapore is 21 minutes to noon, and we want to take a look at what happened on Wall Street overnight. And we have the US equity markets basically pulling back a little bit after the minutes of the FOMC meeting for June was actually released, showing that there were almost unanimous agreement to skip the interest rate pause that we saw last month. But we are already now in July, and of course this month we have another FOMC meeting scheduled for July 25th to 26th, and market expectation is that the Fed is going to hike interest rate by a quarter point or 25 basis point at this month FOMC meeting. So that's basically the news that caused the market to pull back a little bit, and but right now what we are seeing is possibly a technical pullback in US equity markets. So let's get into it. In the Dow Jones itself, we saw that the market recent highs at 34,467, which was traded last Friday, just before the super long weekend going into the US Independence Day. So we can see that the price has been a little bit soft of late, and I did mention that the market can go to 34,169 to 34,712. Actually offers a great area to actually do a counter trend trade. And if you have done that, because the high is 34,467, it is well within this bracket of prices, and market has eased off a little bit. Going forward, there is the possibility we may see further erosion in the price in the Dow Jones, going down perhaps into the 33,250 to 33,500 levels. So this is my immediate target for this move. Hopefully market can stabilize around here before they push up again, but we will have to see. Okay, if we see a sharp decline below 33,200, then perhaps we are looking at something very different. Okay, so in the meantime, just take it as a technical pullback for now. In the S&P 500, we know that the S&P 500 actually managed a new yearly high on Friday itself, and the market actually traded to 4,458.5 before it basically trades sideways. There was very little profit taking going on in the S&P 500, largely because tech stock is basically holding the market. And we are going into the Q2 earnings season, and most companies will be reporting their earning reports, and let's see whether there will be any nasty surprise that's been built in the run-up to the Q2 earning reports itself. So we will have to watch. But if we do get a pullback, most likely we will probably see some kind of support around 4,328.8, which is the low traded here on June 27. So this area may offer a little bit of support. Even if the market go below here, I would suppose somewhere around 4,210 to 4,305. I think that should be able to offer some kind of more durable support here before the market attempts to go even higher. Okay, in the Nasdaq itself, Nasdaq 100, we do not have a new marginal high for the year. The high traded was almost 3 weeks ago at 15,284.65, and on Friday we did have on Wednesday we did have a challenge here at 15,275.18, which is yesterday, but not by very much. Market actually in my opinion offers a great place to actually do a counter trend trade. I did mention yesterday in my yesterday update that 15,240 to 15,227 actually offers a great area to do counter trend trade, and price actually go marginally into this bracket of prices with a high of 15,275, and we would expect, or rather I would expect price to ease off from here, perhaps into 14,500 to 14,700 range, and before it stabilizes, and perhaps, who knows, maybe another attempt to go to do a new high for the year. Okay, over in Asia, we can see that prices are beginning to retreat from the high in the Nikkei. Nikkei actually did a attempt to actually challenge the high traded 3 weeks ago at 33,772.9 with a high on Monday at 33,762.8 without quite breaking it, and the market right now is coming under profit taking, and we can see this morning the profit taking is a little bit more aggressive compared to yesterday, and if this trajectory continues, maybe we will see a price drop price between 31,900 to 32,300 range, which hopefully will offer a little bit of technical support before the market decides which way you want to go. Okay, and in Hong Kong, we see a very sharp decline in prices. This morning, we have a low of 18,503.7, which is the lowest we have seen since when? Since June the 2nd. So we are looking at taking out the June low perhaps at 18,044.86 in the early part of late May. Okay, so this being the case, the case for continued weakness in the Hang Seng could still be there. Not sure whether the price here between 18,000 to 18,850 can actually hold, because this is actually happening on the back of yesterday's release of the Caixin services PMI numbers, which was a disaster. Market was previously at 57.1, it went out to 53.9 in yesterday's report. So basically, we are seeing the services sector showing sign of weakness. We already know the manufacturing sector is already in contraction zone. Now, if we also have the services sector also facing heavy headwinds, that means the Chinese economy is likely to contract. So that is definitely not a good news. And of course, Hong Kong is the window into China, and that obviously will impact Hong Kong equity prices. So this is the background we are seeing as to why the Hong Kong market comes off so much over the last 24 hours. Over in the Shanghai Composite Index, we are also seeing a pullback, and this pullback, although it's not as drastic as what we saw in the Hang Seng, but it is still a pullback nonetheless. The low so far at this moment in time is at 3,205, and there's a very good likelihood it may even go below 3,144.4. So this is setting the stage weakness, very different from what we saw at the beginning of last week when prices beginning to recover. So again, we have a situation in which the high here is lower than the previous high, and this is always a problem for those who are calling for higher prices. So in the meantime, let's take it that the prices may actually attempt to take up 3,144.4 going forward. And in the energy markets, we see that energy prices has been very, very firm. Prices are traded to a high of $72.13 overnight, and it looks like it may actually go out and take out this $72.68 traded on June 21st. And I've always mentioned the possibility of market inching even higher, perhaps to $73 to $74 is always present. So let's see what the market can do here. I think there's a very good chance market will go to $73, $74 over the next few days. Over in precious metals, we also see firmer prices overnight before the market comes back down. But before the market actually went up to $1,935 before coming back down in late New York trading. And this morning we are at $1,915 thereabout, and prices are getting very, very close to another potential area of support. Of course, basing on the idea that the market has rallied from 1,893 to 1,935, pulling back 50%, which will put the market price ideally to hold at about $1,914. So somewhere between 1,909 to 1,914, I would expect to see some kind of buying interest re-emerging to take these gold prices resolutely beyond 1,935. I do have an expectation that perhaps over time we can see gold prices going back to 1,983.5. Now, this pullback is actually a godsend for those who have been caught below the $1,900. So this is actually very higher. Over in silver market, silver has hit its ideal target. I have mentioned that there's a possibility silver may actually go into $23.26 to $23.50, and it did. The high traded yesterday was $23.31, and the price pulls back from there. So right now, what we can see is that the market has done a three-wave equality rally, and if there is no further surge in price, and if that's the case, I think the $22.11 will be quite vulnerable. But if we do get a surge beyond $23.50, that will be a different thing altogether. So look out for both possible scenarios here. In the dollar index itself, we see continued strength going forward, but this is basically seen to be a rebound. I think the market may have already peaked at 103.23 when it actually went up there on June 30th. So basically what I'm thinking is that the prices may not even go beyond 103.23. But if it does, 103.26 to 103 is still a good place to do a counter trend trade. I do see further weakness in the dollar going forward, and so much so I think the 101.49 may actually be compromised if we do see a very sharp pullback here. Okay, over in the euro dollars, we can see euro dollars has been also pulling back as well, and the low last traded on June 30th may come back again. Looking at the way it slides down, it is quite vulnerable. We are only less than 9 pips away from the low that we saw at 108.35. Every possibility here the market may actually go below here, ideally come to 107.70 to 108.10, so that it will allow me to position a buy. But obviously, if I have to buy the other currency with the view that the dollar may actually go down, I think I have better candidate. But if you are already in euro dollars, this could be a good trade setup here. Okay, in the sterling market, we can see the sterling has been holding ground, and we did not beyond 127.39 that we saw on Tuesday. So yesterday was a down day. If market pulls back a little bit to 126.50, market could offer a second chance to buy if you have not already bought at 125.90 when it dipped into this bracket of prices on last Thursday. So here we are. If you have to buy, this will be 150 to 126.65. Over in the Aussie market, we do see a pullback, and market may have already bottomed out, but I still hold out the possibility we may see a marginal dip below the morning low at 0.66550. The ideal place to actually position along will be 0.6640 to 0.6665. We are already there, and if that's the case, the possible challenge of the 0.6720 levels. This level need to be cleared before we can expect higher prices. We will have to see. Okay. In dollar Canadian has been very strong this morning, and we do have prices currently trading at the top of the range for today so far. The high traded is 132.97, just under 133 even, and at this trajectory I do believe the market may extend a bit higher to 133.70 to 134.10. So this will give me a equality three-wave rally from the low of 131 chance to buy at 132 to 132.20. And if you have not bought, I don't think you want to get in at this current price. Just let it go and watch for a reaction at 133.70 to 134.10. Over in the dollar yen, this will be the one that's hard to crack. Market has been very, very cautious since last Friday after it traded to 145.07, and the market has basically gone sideways over the last 72 hours of trading. And if the market do bounce up to 144.66 to 144.84, I think that could actually offer us a very, very low risk, high reward potential short counter trend trade. The reason why people are anxious about 145 is because last autumn at 145, the Bank of Japan came in to intervene by selling the dollar, buying the yen, and that caused quite a bit of a downside move in the dollar yen rate. So who knows, maybe they will come back in again, because Japanese officials has already been talking about the yen falling too fast, and maybe it calls for the some kind of intervention. So for those who are to long dollar yen position, maybe it's time to get out. And for those waiting to sell, if you think that 144.66 to 144.84 is a gap to do, then I think that will be a great setup, if you want to do counter trend trade. So over in the digital asset space, we can see that Bitcoin has lost some momentum here. The last time it actually challenged the 31,458 levels was only on Tuesday, but the high traded at 31,378 actually failed to take out the high here at 31,458, and obviously now the market is coming back down. It could be a three-way pullback. For all I know, market could be testing the 28,000 even I would say 29,000 to 29,450 levels. So do look out for continual weakness into this bracket of prices, and hopefully it will hold. That could actually create a condition for another rally. I think the bullish sentiment from the rally from 24,756 to all the way to 31,458. So basically now the market is pulling back, giving us another chance to buy. I think the big boys are already positioned, and we want to see whether more heavy hitters are going to come into the market to buy. In the meantime, this is all I have for you. Tomorrow I'll give you another update. In the meantime, you take care. Bye-bye.